Okay, stock market technical analysis. Let's go ahead and get right into the charts. Guys, if you're finding value in the content, give me a thumbs up. I do appreciate it. If you're interested in the private member group, I'm putting out additional trade ideas, additional market commentary. You know, if I stop out of a trade, I'm typically posting it there in the private member group. It's really hard to put out play-by-play action on the public videos. So link in the description below on that. All right, so we'll start off with triple Qs. What we have is obviously a new high. We did get that just on Wednesday of last week, popped up. And really, this is support now. I mean, we're holding that high. It's basically about 449. That was kind of your former high. Until that fails, that is support. There's no reason to basically short the market right now, short tech at least. It's not something I'm looking to go long. But let me tell you why, and we'll kind of get into that. On the triple Qs, we do have a new high. It is still a divergent high. If I zoom in on the RSI, look at the momentum. Clearly, you're making lower highs and lower highs. Now, if the RSI continues to move higher and we push up and make a new higher high, then that changes that narrative. And then at that point, you probably would be looking to buy dips. I think it would make sense to buy dips if you no longer have negative divergence. But as of right now, we clearly still have negative divergence, and we want to watch that, okay? So what I'd be looking for, you know, I'm not looking to go long here on this breakout. I think this breakout is going to get sold into because it is a divergent high. We have negative divergence. Typically, divergence has a higher probability of getting sold into. So I do think that's going to happen. Now, if we don't have divergence, then all of a sudden I'd be looking to buy the dips. So that's really my trading plan there. Let me go to the futures. Look at the NASDAQ futures, see if we can see anything there. Yeah, you can still see clear negative divergence. Let me just kind of extend it out. And there it is. You have momentum dropping off and, you know, making a new high. We are making a new divergent high right now. But I would put good odds, unless that divergence is burned through, I put good odds that this divergence gets sold into. All right, so that's really all I see on the futures. If I go for the NASDAQ, if I go to the Mag 7, Amazon, this is a trade idea I pointed out a couple days ago. It's working. And again, so on this one, we had kind of a bearish rising wedge. Here's your negative divergence there and getting sold into. First support, I believe, is a right around 179.69. This was like a trade. I think I got it on the 5-minute chart. It's an active trade. But if I look at that, let me kind of, there we go. So on that one, you can see bearish rising wedge. All right, we started to build negative divergence. Once we broke here, the major target of the wedge is the widest part of the wedge, which is about there. And you take it to the breakdown point, and it sets us up for a push down to about 179.75. Okay, and again, I think we continue down there, go down and hit that. It's about a 5% trade on Amazon. That's really all I had on that one for now. But yeah, it's working. The other one, Meta, looks interesting because, again, we had that island cluster top right here. All right, we gapped up, we gapped down, creating the island. They've traded it back into that cluster. But in general, this is the area where I would expect resistance to be at, right around in here. We can go maybe a little higher, but in general, this is where this should, you know, get rejected at. If it doesn't and it continues up, you stop out. But otherwise, I think it does make sense to actually be short this one, Meta, for that next push down. So I'm watching that one. NVIDIA, this is the one, they got earnings this week, so I suspect the market's gonna hold up until NVIDIA reports, and then we'll probably see some movement after NVIDIA. And this one can go either way, right? You know, at least post earnings. Could pop up, make a new high, could drop down to what looks to be the major trend line. All right, support. You can see lots of reactions. So the downside, you know, it depends on where we're at come Wednesday, I believe, is when the earnings at. I think they're probably going to push this thing up and make a new divergent high into earnings, and then I think it gets sold down after earnings. Maybe not initially after they report, but the following day to days after that. Okay, so I think we'll be up here making a new high in this one, and then ultimately it's going to get pushed down. But for now, for me, I'm not going to take a trade on it. I'm going to wait till after the earnings to see where we're at, and then I'll look to, maybe establish a trade. Apple continues to move up, and again, I think Apple could continue to push up to this 179.80 area. So, yeah, Apple. I don't see anything bearish here in Apple. It could go up a little higher. Up there, we do have pretty solid resistance. You can see resistance. This one didn't quite hit it, but so I think we push up into here, and that's where your resistance is at. Microsoft, that one's basically trading at resistance right now. I think they're right there. I think they're going to push up and make a new divergent high. It would be a divergent high. You can see momentum clearly dropping off. So just a slightly, just a little pop above those former highs, put in that divergence, and then they'll sell into it. So in general, I don't see any reason to go long these tech stocks. Maybe Apple, you could go up a little bit more, but it's not objective to go long here. If I go back to Apple, it was objective to go long down here. All right, I had that circled. That was the objective area down at support with the bullish divergence. Right here, when I think there's limited upside. Okay, I think there's probably a little more upside, but I believe it's limited. So it's risk reward. It's not good to go long on most of these stocks, and I don't want to short quite yet either. Because I need to see some failures of, we need to see sell signals and some breakdowns. We don't have any of that right now. So just kind of sitting tight on these. GDX, gold, and the gold miners. You've got, just continuation of that negative divergence now. Here's the GDX. You can see we have negative divergence. It's not confirmed. So, if it keeps going up, it'll burn through that. Otherwise, if it turns down soon, it will confirm that divergence. But there it is right there. And also GDX, to me, looks like we're kind of approaching maybe a longer-term resistance area up above. And then the gold did not have negative divergence, and I talked about this. I thought that gold could probably pop up, put in a new high right there, and there it is. There's the divergence that I had drawn out last week. So gold, the metal is now, gold futures at least, putting in negative divergence. Gold miners have negative divergence. So I think these are probably going to pull back. The miners have, pretty much just shot straight up. I think they're going to pull back for a correction here soon. And, the dollar, always want to look at the dollar when you're talking about gold. The dollar DX, dollar futures, holding what looks to be some support right here. So we're above the 200-day. It looks like we're holding an uptrend. And the dollar is in an uptrend. You can see higher highs, higher lows. So again, I think the dollar's about to make another push higher, and that should be bearish for gold. So that's what I see on those. Oil, this one looks to be holding some support. It's just kind of consolidating basically, but you've got this uptrend line here on the oil futures, and we've just been consolidating for the last couple weeks, and nothing's technically changed. It's still holding support. So a breakup in oil, a pop-up should set this thing in motion for the next leg higher. That's the way I'm leaning right now. Especially, with just seeing some of these other commodities holding up. So we'll flip over to these. Like, obviously, wheat's the star today, up almost 5%. Good size move. But in general, I had been talking about this one for a while, but it's got clear bullish divergence. You've got this bullish falling wedge. The widest part of the wedge, which is typically the measured target, is going to be something like this. Take it to the point of the breakout, which is either here or here. So we'll just be conservative and say it's there. That sets wheat up for 666, 667-ish. And yeah, if you look at the price action, it tells me it's heading up there. So, from that breakout point, wheat, if it hits the target, it'll be up about 26.5%. So that's where I believe this is heading, and then we might get a pullback at that point. And then another one, which is kind of a wheat-related trade, I pointed this out a couple weeks ago, NTR. Again, on this one, I've been talking about this for a while, but resistance, you can see this clean and clear downtrend line, put in this bullish falling wedge. Clear bullish divergence on the momentum. Widest part of the wedge really puts us to about right there. And point of the breakout. So again, I think this one has got 69.30 in its sights. I like that because there's clear support and there was some resistance. So that's where this one looks to be heading, and it's up 5% today. So I've got this blue line marked out. That just shows the measured target. But in general, this is the target where I think it's heading. So it's got another, from where we're at. It's not objective to buy it now. If you haven't bought it already, it's not very objective because you're just buying, you're just chasing. But in general, about 14% or so more upside. So yeah, I like that. And you can see here, the former resistance, nice clean resistance in this area. And look, we broke out, consolidated, boom, impulsive break off of that level. So it validates that level as support, 57.20. So pullbacks to support should be bought. It's buy the dip basically. I don't think you're going to get another opportunity to buy it down there. But yeah, this one looks like it's heading higher. All right, let's talk about some of these shorts. Some of them obviously not working. Some are still doing okay. ANF, this one popping up, making a new divergent high today. You can see we had this potential trend line, but I talked about it only being potential because I only had 2 data points. So it's not a valid, it was just potential, and we didn't really get a reaction there. So I can't validate that as a trend line. So in general, what I really see is, on the short term, we've got this uptrend line here on the daily chart. This is a new divergent high today. We are popping over those former highs. And I think that's probably it in terms of the upside. We've got earnings coming out in the next, on Wednesday, actually. Or actually, it says it's Wednesday, the 29th. So that might be a week from now. But we're making a new divergent high. I think it can probably hold up here into earnings, but we'll see. In general, as long as the divergence remains, if this starts to turn down and we can keep the negative divergence intact, then I would believe that the earnings is going to be perceived as negative and it's going to sell off either after or slightly before earnings, but earnings will be the catalyst. On the hourly, if I go down to the hourly, here's the trend line to watch if you're looking for a sell signal. All right, support, lots of reactions. And so a break of that support would be the sell signal that would likely trigger, the next swing trade to the downside. With earnings coming out, kind of a crapshoot. You never know how this is going to work out. It could always gap it up and stuff like that. But that's what, those are the sell signals I'd be looking for, break of that trend line. And also confirming the divergence. Qualcomm, this one continues to kind of back test. It is above support right now, but it's just barely. So to me, it still looks like stop rating action. Like they're going to reject it right around current levels. However, it's probably going to hold up into NVIDIA earnings and react accordingly. NVIDIA is the king of AI, and the king of the semis, basically. So, this one's likely going to react based on NVIDIA. So it's kind of an NVIDIA earnings play at this point. But, still holding that resistance. I still see negative divergence. Any more upside, they might burn through that divergence, but we'll keep an eye on it. GM, this one is just, dead in the water, basically. It's big sell signal here, rallied into resistance, and it's just stuck. It's going nowhere. Negative divergence remains. So, again, I think that this is, going lower and selling off today, but nothing's technically changed. I do believe this is the top. They could still pop it and make a new divergent high, but I would expect that gets sold into. Okay, so I don't know 50-50, if they pop it and make a new divergent high or whether it gets rejected here. I'd say it's kind of a 50% odds. But it is at resistance, so it's objective to short here. This one I pointed out a while ago. I'm no longer in the trade. I took my profit when we hit this level of support at about 164, 165-ish, and then it kind of just danced around this level for, a month, basically. It is dropping now today, pushing down to the 200-day. And, yeah, I suspect it's going to hit that 200-day, and then you have earnings coming out, so it could bounce after that. For me, there's no risk. It's not worth the risk isn't worth the reward at this point as you're dropping down to the 200-day into earnings. I'd rather just, see how this trades after earnings. But I can see this going quite a bit lower, but yeah, we have to see how earnings plays out. And then these financials continue to look good. These short trades, JP Morgan, Visa, Schwab, those are the three that I'm currently short. JP Morgan rallied in, I've got this blue trend line because if I roll out, I had a lot of reactions on that previously. I've got them kind of circled. It broke trend and then it was back testing from underneath. Kind of went above slightly, but again, we had that negative divergence and recently popped up last week, made a new divergent high. All right. But the negative divergence remains intact. And so when you see negative divergence remain intact and you pop up and make a new high, very high likelihood that that's going to get sold into. And sure enough, today, that's the kind of impulsive selling you want to see to help confirm, resistance and to help confirm that that negative divergence is being acted upon. Down 3%. That's a good size move in JP Morgan. Typically, you don't see moves that large, but in general, nice impulsive rejection off that trend line. And so again, I continue to look for downside. Whether they can keep grinding it along this trend line, I can't say. But what I can say is that negative divergence remains and it's elevated probability that you're going to get rejected at this resistance. And so, yeah, and with today's price action, it looks like that's probably started. So we'll see if we get continuation to help confirm. Probably get a little bounce right here at 193.30. I see some support there, maybe a bounce there. But ultimately, looking for more downside on JP Morgan. And then like Visa, again, this one's nothing's really technically changed here. So we're just kind of chopping around. This one will very likely go where JP Morgan leads it. And interest rates, big part of obviously the market is interest. In fact, I think the only thing that really matters to this market is not earnings. Earnings, you can get little pops here and there, but the market as a whole trades according to what the Fed's going to do. So earnings can give things little pops. You can have little manias kind of spark and starts and fits. But in general, the market cares the most about where interest rates are heading in the future. And so this is TLT, the long bond, basically 20 plus years, resistance, 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 and resistance. As long as this is continuing lower, then interest rates are continuing to trend higher. And if interest rates continue to trend higher, the market in general should go lower. Okay. So yeah, you can have interest rates, you had this rise here, which meant you had falling interest rates. The market rallied. But again, go back and look at this, from the period of time when this was dropping and interest rates are rising, and you'll see that very likely the market was falling. So if we go down and make new lows in TLT, we should see a spike in interest rates. And then another one is this IEF. This is the 10-year. You can look at the TNX, which does, that's the actual interest rate, but this is the bond. And you can see support is now resistance. All right. So again, nothing's technically changed. Now, if we start breaking some of these key levels, then that's going to be a technical change on interest rates in the market. That will have an impact on the market. But as of right now, this is resistance. If this continues lower, interest rates should continue to rise. Okay, that's all I have for today. I'll get the video out. Drop me a thumbs up on your way out. Catch you guys on the next one.